Okay. So hello guys, my name is Devansh Dhona and I will be the faculty for FAM. Along with me, Praveen sir and Shivani ma'am is also there. Their recordings would also be provided to you for the FAM lectures. Now FAM is essentially a paper in SOA which is Fundamentals of Actuarial Mathematics. The duration for the paper is about 3 months, approximately 3 months. Obviously it can be completed before that, it can be completed after that as well. The next attempt for the FAM would be in March 2025. The total duration for the FAM exam would be of 3.5 hours and there would be 34 MCQs in it. And inside one MCQ there would be 5 options to it. They might give you 4 options, but generally it has been seen that they provide you with 5 options. And the options that they provide are actually really tricky. So it requires a lot of practice before you do and sit into the actual examinations. And for that we have prepared a lot of mods. We have prepared a lot of MCQs for you guys, and it would be provided to you in the form of LMS, which we have built, and the format for that LMS would be similar to what would be provided to you in the exam. Okay, so first of all, what are the prerequisites for the FAM examination is just something which is a formality, that if you know this, then it is well and good, then you have a advantage, then you are a step ahead than others who don't have this knowledge. But again, it does not really matter because you will be providing you with the knowledge from scratch. So the prerequisites are P, FM and VEE mathematical statistics. But again, it is not required for you guys to have this knowledge because, as I said, we will be providing you with the course from scratch. And if you face any problem, obviously you can let me know, or you can let any other faculty member know that you are facing this problem, and we can simply address this and we can simply teach you that concept and be done with it. Next, we discussed the syllabus for the FAM. The syllabus for the FAM is, to be honest, very, very big. If you have given P examination, if you have given FM examination, then just to let you know, the syllabus for FAM examination is more than the combined syllabus of P and FM examination. So be prepared for that, because this syllabus is huge. Because earlier there used to be FAMS and FAML, but now they have been combined and now you have a single paper known as FAM. So that is why there is a extended duration which is required to complete this paper. And along with that, the syllabus is also very huge. It is comprehensive and it will provide you with a lot of important knowledge which is required for you while you sit in your actual job. So first of all, you have short-term insurance and reinsurance coverages. This will teach you about the different coverage modifications that are there in your insurance policy. It will teach you about the policy access. It will teach you about the policy limit. It will teach you about different add-ons, different covers that are there inside a general insurance policy or inside any policy for that matter, and calculations for the same will be taught to you as well inside this particular topic. Next, you have your severity, frequency and edit models. Inside this, you will be taught about the number of claim distribution, about the claim amount distribution, and how to model that, how to calculate that, how to use that to your advantage, how to calculate the profit for a company, insurance company, how to back calculate and derive the number of claims calculation. Everything will be given to you. Everything how to derive that will be taught to you inside this particular topic. Okay, like you will be taught about the different kind of risk calculation as well, how to calculate risk. You will be taught about VAR, you will be taught about tail VAR as well. And the best thing about this is that if you are someone who is actually working in the real life field about general insurance or rate modeling, you would be able to connect with this chapter very, very easily, or you will be able to connect with FAM as a matter of fact very, very easily. So that is how important this subject is, and that is how relatable and comprehensive this subject is going to be. Next, you have parametric estimation. So obviously, while you are dealing with different kind of model, you are dealing with number of claim model, you are dealing with aggregate claim model, you would be working with a lot of parameters. If you have done P, then you would remember that whenever we are working with a distribution, you have some kind of parameters in it, right? So estimation of that parameters are done on the basis of the data which has been collected by the insurance company. So how to estimate that parameters is what we are going to learn in the parameter estimation form. Now the data is not, we will be learning about different ways in which the data would be presented to us and how to estimate parameters on the basis of that. That is what we are going to do in parametric estimation. Next, you have credibility, right? So for an insurance company, it is not necessary that they will have to rely on their own data only. They can purchase data from other sources like consultancy company, and they can base their calculations, they can base their estimations of their data as well. They can make their pricing, they can do reserving, they can calculate the value of their policy on the basis of their own data, as well as on the basis of the data which has been presented by the consulting company or by the regulator itself. Okay, so that is what we are going to deal with in credibility, because you will have some data of your own, you will have some data which you have purchased from the outsider, so you will have to give some weightage to your data, you will have to give some weightage to your insurer's data or to the regulator's data or to the consultant's data, right? So that is what we are going to do in credibility part. Next, you have pricing and reserving for the short-term insurance coverages. So what we are going to deal with in this particular part is how to set aside reserves for a short-term insurance policy like general insurance policy. Like for a general insurance policy, what usually happens is that accident can happen in a particular year and the claims will be reported maybe 2 years or 3 years from now. Something like this can happen. There is always a time lag between the accident, the time when the accident occurs, and time when the claim is reported, and the time when the payment happens, and time when the dispute regarding the payment happens. Okay, so because let's say if I get into an accident, I am admitted into the hospital, I cannot obviously make a claim regarding this until and unless I recover from it. So as and when I recover from it, I will make a claim with the insurance company saying that I have been injured and this is the reason why I was not able to submit the claim, and now give me the payment. So for an insurance company, they cannot just simply take away the entire premium from a particular accident year which they have related for a particular accident year and just distribute it among the shareholders, saying कि यार claim तो आया नहीं, अपने simply distribute कर देते हैं. They cannot do that. They will have to wait for the claims. They will have to wait till they receive a claim, because it is possible someone has got into an accident but the claim has not been reported to the insurance company. Something like this can happen. So for that is what we are going to deal with in pricing and reserving part. How to set aside reserves for these claims, how to model these claims, how to model the pricing for this claim, how to model how the prices are changed. Like obviously that the premiums that were charged 2 years from now for a simple life insurance policy would be much lesser than the premium that would be charged for the similar insurance policy in current time. So how to model the effect of that is something what we are also going to learn in this particular part. Okay. Next, we would be also going in depth about the option pricings. We will be dealing with different options which are there. We will be dealing about call options, put options, and how to price that. We will be dealing about delta hedging, which is basically how to hedge our portfolio against movement in share prices. We will be dealing with how to price a call option, how to price a put option, and inside that, if you have done CFA, then you would know that we will be dealing with binomial model, and we would be dealing with Black-Scholes model. We don't have much in depth about option pricing in this particular chapter, but still it is a lot to cover. So that part is also there. On average, 5% of your questions you can expect to be there from option pricing. That important this chapter is. Next, you have long-term insurance coverages and retirement financial security programs. Let's say the name of the chapter is very long, but to be honest, what inside of this chapter is very essential for you guys, because whenever you are working in an insurance field, or if you are working in a life insurance field, or if you are working in a pension field, whatever you are working in, or even in your real life as well, you should know what kind of different life insurance policies that are there, about the different pension schemes that are there, about the defined benefit, defined contribution schemes and all that. So that is what would be taught in this particular chapter. That is what would be taught in this particular category. About all of the different life insurance policies that are there, about all of the different pension schemes that are there in force. That is what we would be teaching in this particular category. Next, you have mortality models. Under the mortality models part, we would be dealing with the data which would be provided by regulator. Obviously, every single regulator in the country provides some kind of data to the insurance company, and how we are going to use that data in order to price a particular insurance policy. In order to calculate, we will be calculating the mortality models. We will be predicting the future lifetime of a particular person. How many more years this particular person is going to live. How many more years this particular person is going to live before they die. That is what you are going to calculate in this particular chapter. You will be fitting different survival distributions onto a lifetime of a particular person. We will be dealing with Gombert's model, Mayhem model, we will be dealing with Demoivre's model, and so on and so forth. There will be n number of different models that we will be dealing with under this particular chapter, which is very important. Next, you have PVRV, which is present value random variable for long-term life insurance coverages. And inside this part, you would be dealing with different life insurance policies which are there, and about the different annuity policies which are there. Like for example, endowment assurance, life insurance, about pure endowment, about term endowment, and whole life assurance, and everything like that. You would be dealing with temporary annuity, whole life annuity, and how to model that. What are the cash flows for that particular model is what we would be dealing with in this particular chapter, right? And we would also be dealing with special insurance policies, which are a combination of multiple different vanilla kind of policies, which would be sold to an insurance company, which can be sold to a policyholder. You will be dealing with how to price that. You will be dealing with how to model the cash flows for that particular model, for that particular policy, is what we would be. Is what something which we will be considering in this particular chapter. Next, we have premium and policy value calculations. As I said, that you will be dealing with cash flows, so obviously you will have to price it, you will have to make reserves for that, and everything is what we are going to consider. Okay, so this is a very exhaustive and this is a exhaustive overview of your syllabus for FAM. And as I said, the recommended duration for this particular course is about 3 months. Obviously, you can do it before that depending on your study hours, and you can also complete it after that depending on your study hours. Like for example, if you are a student, then you might want to give about 7 to 8 hours on a daily basis to cover this entire part as quickly as possible, because as and when you complete it, you can go for your next paper, you can start preparing for your MCQ questions and get the best result possible. And if you are a working professional, then also our timings would be suited to your needs as well, because we would be conducting classes at the night, we would be conducting classes during the weekends as well, and we would also have master classes before the examinations as well. Like for our current batches, which has just ended, we had a lot of revision classes just before the examination, so that we can go through all of the syllabus right before our examinations. So for this time as well, for this batch as well, we will be doing the same thing. Next, the lecture hours would be about approximately 150 hours, and that would include my lectures, which would be conducted in a live online format, it would be conducted in a live online format, and you would also have access to the lectures of Praveen sir and Shivangi ma'am, who is a qualified actuary, and Praveen sir has cleared 14 out of 15 papers as per the old curriculum from IAI. So both of them have tremendous knowledge, tremendous experience in their field, and it will help your cause if you go through their lectures and my lectures in a blended format. Next, you have the contact number, which is 8100598543. Obviously, this is an Indian number, so you will have to add +91 to it. So if you are calling outside India, then you will have to add +91, and then you can just contact this number and ask for further details if you want to. The prices and everything would be communicated to you through this number, or you can log into our website actuatorseducation.com and get all the details which are available with us from there. Thank you.